Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, let's take a look at the gold market as usual. So here actual tendency stands according to our expectation. We said that since market has failed to reestablish and just break this 1240 area and shows the clear wash and rinse on Friday, the butterfly that we have traded as a target is 1243. After that it shows the drop. So in general it keeps the bullish sentiment in the market, but it seems that market needs some pause of the downward action, and the bit weaker statistics on the last week, as we have mentioned in our weekly report, could support this direction. I mean, retracement really could happen, but at the same time we do not expect a really deep retracement. So we think that the hitting of the 1211 is the maximum level, I mean the lowest level that market could reach, this maximum retracement level. Also, this will be important, as you can see, previous consolidation upper border. So it's called market likes to do this, retesting of the important areas that have been broken recently. So meantime, on the daily chart, yesterday we've got the grabber, and in general the downward action develops very slowly. It just confirms an idea of in general the bullish direction on the gold market, and that we treat this pullback only as a retracement. Besides, you probably see what really has happened on the yesterday on stock market. So Dow Jones has dropped really miserably, and I am preparing to get the double repo sell pattern on the Dow Jones on the monthly chart by the end of October. I will show you here. Just take a look at the monthly chart of the Dow. So this is a perfect example of double repo sell. So we have thrust up, close below 3x3, close above, take the new top and collapse. So this is definitely the capitulation of the bulls. Market right now already stands below the 3x3 moving average, and within the couple of sessions, if we will get the close below it, that will be the double repo sell. So perfect example. So minimal target will be 21 and 3 area. So by the Dow, it's really very big distance. So you could imagine what this will be. For the monthly chart, this is really a very important event. I even suggest that this is not just the double repo, market will not stop here. This will be downward continuation due to our analysis of the Nasdaq and the German DAX. So, but this is another story, guys. This so for you, if you're trading the CFDs on the stock market, be careful with any long positions, because that, guys, really big event. Now returning to the gold, this supports the gold market, and you can see the downward action develops really heavy. It's definitely market do not want to continue downward action. It's very gradual retracement, and this is actually good for us. So on the 4-hour time frame chart, we have the channel. Market right now stands at the lower bottom of this channel, and if downward action still will continue, probably it will be very gradual. Here we could talk about maybe kind of the hand shoulders pattern could be formed, right? So this kind of neckline here could be left shoulder and head. If market will reach this support there and complete this 127 ultimate extension of the butterfly pattern that we have discussed in the weekly report, later we could get the bounce up from this support area, assuming the harmony of the shoulders. This will be somewhere to this level. And take a look. In general, this could be ABCD to the 1211, 12 or 9 area as market could reach with this downward retracement, if everything will go as it is suggested by the patterns that could be formed here. But right now we are watching for developing of the downward action. Market right now stands at the support. The grabber that we have on the daily charts a bit worries me, since it's very good grabber and it really could suggest the taking out of the stop. So we have to be careful with any if you trade on intraday charts, you should be careful with any short position. But since we're mostly watching for a long entry on the market, we have the opposite actual scenarios here. So if you're a scalp trader, you could use the grabber for trying to take the long position with the attempt if market maybe will show another spike here above this top. This also could happen. This is a gold market, guys. For others, we should just do nothing and wait when the market will hit our major support area. I mean, for those who trade on a daily chart. If you're a scalp trader and you're searching for to go short, well, it's a bit really tough task right now with having the bullish grabber on your back. But still, maybe this opportunity could appear. For example, as you can see here, our downward action that we have discussed also in the weekly report, we have this ABCD patient down. Market has hit the OP recently, 1224. Unfortunately, on Monday we haven't got any deeper upward action. So if you remember, we have expected to get some kind of the minor hand and shoulders, at least kind of the ABCD retracement. But market wasn't able even to complete this AB equals CD leg with collapse down, hit the OP of the steep ABC top pattern, now then stands in retracement. At the 1231, 1232, we have the confidence resistance, and if market will complete a kind of the ABC retracement here, that could become the Gartner's cheap will to sell. That will be the chance for taking the short position if you're watching for it. But try to move your stops at the break even. So with the minor respect of this confidence resistance, this minor bounce, move your stops to the break even, because we have bullish grabber on the daily. And market could show just minor reaction on this resistance and continue upward action. This is the risk that exists right now on the market. And this will be accompanied to any short position on intraday charts that you would like to take. So it means that it's better first to get the passion on your back that you could use for taking the short position. Second, trying to take the position at the strong resistance area, which is a confidence resistance. This at least will give you some hope that market will show at least minor bounce as a technical reaction on the resistance, and that lets you to protect your position with the break-even stop. With the other circumstances, until market stands above these lows and keep well at this grabber, it's better to not take any shorts. So because this is just looks risky. So that's our view on the gold market. So you can see currently we actually have mostly only intraday steps and just waiting where the market will reach some significant daily support where we can think about taking the long position again.